I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. A lot of crazy stuff going on since we last spoke, that's for sure.
Well, the S&P setting, near record highs, the NASDAQ setting record highs, the Dow's churning along. Why all this excitement in the equity markets right now?
Well, I think a big question, and I'm not sure the answer, and I think the next couple of days will tell, is are we really seeing something different from when we last spoke, which was 2 weeks ago? Now, 2 weeks ago, I was saying that I thought we'd seen peaks in the Dow and the S&P 500 at the start of March. That was the day following Trump's speech to Congress, in which the Dow went up about 300 points, and the next day gave it all up. It looked like something like a classic exhaustion move. And we saw the market pull back a little bit over the past couple of weeks, going into this French election, which of course happened Monday. However, during that pullback, a lot of the stocks that had led on the Trump rally really fizzled out, such as the bank stocks and the transportation stocks. And leadership inside the stock market shifted into the NASDAQ. In fact, about the third week of March, I recall seeing a segment on CNBC in which they said that the Trump trade was dead and you just have to buy tech. And that thing that they suggested has worked out so far. On Monday, following the French election, Sunday night, of course, the NASDAQ led the way. The NASDAQ went above 6,000, while the Dow and S&P are just really flirting with their highs. So I think the question is, has anything really changed from where it stood 2 weeks ago? And if you look back over the past year, really since June, each time there's been one of these political events, such as Brexit and then, of course, the Trump election, the market would soar immediately the next day and have a really sizable rally. So I think a lot of people thought the gap up on Monday represented the start of a giant rally, and the gap up gave them a chance to buy at higher prices on that bet. But I'm not sure yet. I know the NASDAQ is through 6,000, but I'm seeing a lack of leadership inside the stock market, and it just looks like it's these tech stocks that are now leading the way. For instance, today, ironically, in the Wall Street Journal, they had an article talking about what they dubbed the Fast Five: Facebook, Amazon, Microsoft, and Apple, and they showed that these five stocks have made up 40% of the entire move in the NASDAQ so far year to date. And when it comes to the S&P 500, Facebook, Apple, and Amazon have made up a third of the gain year to date for the S&P 500. Now, if you go back to November, December, just about every single stock in the stock market went up. It was a very broad-based move. And when you only have a couple handful of stocks that are keeping the market or fueling the rally, or keeping the market up or fueling a rally higher, that's a sign of, either you're in a topping phase or towards the end of a rally. And to me, it's not very exciting to try to get involved in that. I mean, the only way to really play it is to buy those stocks and just, put stops or buy puts on them and just pray they go up. I feel like you're sitting at a slot machine and putting a nickel in or something, but a lot of people, like to do that, and a lot of people have to do something. Personally, I just assume kind of with a bulk or portion of my money stand aside. But what I see is kind of a repeat of the summer of 2015, because that year the market volatility was very small, just as it is now. There's really not big moves going on week by week. And in that year, it was just 5 stocks that were doing it all again, pretty much the same 5 tech stocks. Back then, they called them the FANG stocks. Now they call them the Fast Five, apparently. At least the Wall Street Journal is trying to start that trend. So here we are. Now, if the bulls are right, and this is going to be a repeat of the Trump rally or the rally after Brexit, then we should see the Dow and S&P 500 not just go up to the highs, but immediately go through them over the next couple of days. And if they don't, then I think people need to be aware that something in the market is changing, and we're probably going into a process like the summer of 2015. That doesn't mean it's going to crash next month or in June, but we just have to be on guard. Each one of these earnings seasons is a pivotal turning point. That's what happened in July of 2015. The Dow and S&P didn't do much, and the NASDAQ made a final high, and then next thing you knew, it was down 20% by February. So we got to be on guard for this market to start to change, and it doesn't really do well next couple of days. That'll be a sign that it's happening.
We'll have more with Mike Swanson right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Mike Swanson. Mike, the Trump administration says it wants to lower the business tax to 15%. Do you think it'll actually happen?
Well, honestly, I hope it happens. I own a business. I got several businesses I'm involved in. I have an S corporation, and in his campaigns last year when he was running for president, he said he wanted to allow S corporations to be taxed as a regular corporation and get that 15% rate. Unfortunately, I'm very skeptical it's going to happen. I fear it's a PR stunt, basically, that he has a desperate need to show that he's accomplished something in the first 100 days, and he's just putting out a proposal, much like he did with his budget. You know, he basically had a couple of sheets of paper, and here's the budget I want. You know, increase defense spending, cut these liberal programs, and so forth. And it was just a proposal, a talking point. That budget's not been passed. It's kind of just a stunt. And, you know, if you just pay attention to the political news, it's, you know, there's not a groundswell of demand or support for this in Congress yet. So he's going to have to create a coalition and then just issue press releases to get his packages and bills passed. He didn't do that with the health care bill. He got, you know, this thing Paul Ryan put together, and Trump, all he basically did was show up in Congress, talk to these Freedom Caucus members and try to threaten them and bully them, and that was all he did. And then, you know, it doesn't work in politics. It might work in business world when you're trying to do deals, or you got people that are almost bankrupt and desperate, but it doesn't work in politics. So hopefully he's learned from that. But, you know, I'm at this point where I want to see something happen before I believe it. With Trump, I don't think believing is seeing, but seeing is believing all the time. So I want to see it. I hope it happens, but I wouldn't bet on it. And that's one problem with the financial markets, is that when he won, there are all these projections that he would pass these tax cuts, he would increase spending, And a significant one that was very important that we talked about, I think immediately after he won, was he had a team of economic advisors around him that talked about raising interest rates and having a strong dollar, getting away from the years of quantitative easing with the Fed and easy money policies. These people actually said these policies are counterproductive. And 2 weeks ago, Trump gave an interview with the Wall Street Journal where he basically said he now supports Janet Yellen. He did a complete flip-flop. So who knows what's going on? He seems to answer with what he sees on TV and gets mad at TV reporters or the shows on TV, and then tries to create his own PR stunts to counter them. And that's kind of the strange world we live in nowadays. And the funny thing is, if you look at France and that election over there that just happened, I almost wonder if it's not a repeat of the Trump effect, meaning that if this Macron fellow wins, he probably won't be able to accomplish much either. They say he's an outsider. He's not built up his own political coalition with a political party. So he's going to have a tough time really doing things. And the funny thing is, this week there's kind of like this relief that he is going to win. It's like a certainty that he's going to win. I've seen people declare that, Le Pen is going to lose for certain, and they're calling that the death knell of populism in Europe. We'll see about that. Hopefully he does win. I shouldn't say it, but I don't really want her to win. But I don't think it's the end of all these movements. And, we're really in times of political instability. And that's one reason Trump has a tough time getting things done. It's not just his fault. One of the biggest problems is that the United States is basically the budget deficit's busted and we're semi-bankrupt, so it's hard for Congress to increase spending or increase the deficit, and they're kind of stuck in a situation where they can hardly do anything, and that's where we are. So it's not just the president's fault, but a legacy of spending too much money and printing money, and the financial markets are a part of that. We've had nice gains over the years, but that's not how you build economic growth, just from the stock market. And Trump's advisors are right about that, but they've kind of, the initial ones he had during his economic transition team after he won the election, but those people seem to be pushed aside.
We'll have more with Mike Swanson right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Swanson from WallStreetWindow.com. Mike, Trump has also said he wants to withdraw from NAFTA. Does he understand how entwined the Canadian and Mexican economies are with the U.S.? And, for example, his, in some cases, a 24% tariff on Canadian softwood is going to cost thousands of jobs in the U.S. as homes become more expensive.
Well, it's a puzzling thing there. When he ran, he talked about doing tariff wars against Mexico, of course, but primarily against China. He labeled them as an economic enemy. Those are the words he used. And he met with the Chinese premier a few weeks ago at his resort in Florida and basically said, I'm not doing that now, after he met with him in person. The Chinese came away from that meeting saying, well, look, we're going to study it and get back to you in 100 days, which means they're going to do absolutely nothing. So now it seems as if he's decided he's going to do these things with Canada to make it, look like he's going to do trade wars. But I assume that there'll be, a few changes here and there, but it's mainly cosmetic. One thing that has happened over the past 6 weeks, as I mentioned a lot of his economic advisors that came in to his transition team have been pushed to the wayside, and we've seen the rise of Gary Cohn in the White House, who was one of the top dogs at Goldman Sachs. He's now become one of Trump's top domestic advisors, along with his son-in-law. So when you have Goldman Sachs that close to the White House, I think they'll tamp down on trade wars and so forth, because historically Goldman Sachs and other Wall Street banks, they want free trade and not these type of tariffs and stuff. So I think it's probably another one of these PR stunts or headline moves for now. I hope it is. Frankly, I don't really think trade wars are going to help the U.S. economy or do much of anything else good for anyone else for that matter either. But here we are. I think we're kind of in a strange situation where, we vote for people. We want some serious changes. We get someone in office that promises them, and maybe they're not able to do very much. Same thing happened with Obama. And again, I don't think it's just the fault of the individual, but the situation they're in. Obama came in there after the 2008 meltdown. Trump has come in there partly as a result of that meltdown and the failure of not just Obama, but the Fed to create real sustainable economic growth and the lives for the regular American to improve. It just didn't happen unless they're invested in the stock market, which, a lot of your listeners are, but, the masses have not benefited, and they went out to vote in the Rust Belt, and if Trump, doesn't improve their lives, they'll probably vote against him just like they voted against Clinton. So if you look at Europe, it's kind of what you see in countries like Greece, where you will see one party win one year and get thrown out the next election, and this cycle of them being able not to accomplish very much is what's been going on. And I think the solution for us as investors is not to believe in one leader or one party or one market for that matter and think it's just going to help you out or make you rich, but to diversify. And that's why I'm sort of negative on the stock, or I am negative on the U.S. stock market. It's gone up for years, and other markets, frankly, have a better opportunity with them. The gold market, for instance, we're near $1,200 an ounce. We might get closer to it over the next month or two, and that's a great time to buy, But I want to tell people, sell those so-called fast five and move some of that money in gold. Even bonds, as crazy it is, look like, they can go up this year a little bit, or at least not go into a bear market yet. So there's opportunities outside the stock market to put some money to work.
What's going to happen with oil? Is it going to continue to go down?
Yeah, I think so, and that's where investing pays off if you're patient. One thing that's happened to the oil markets is back at the end of February, there was a record commercial short position build up inside the oil market. They surpassed the records they made in 2014. These are people like Saudi Arabia. These are giant oil companies that use the futures market to hedge production, and they tend to be right at key market turning points. So when you see them bet against things that substantial of a size, that means watch out. And it can take them a year to unwind those positions. So at the same time, you also have the fact that the oil stocks themselves are among the weakest trading sectors in the entire stock market, which is a bearish condition overall. I think they're signaling there. So I think oil is going to fall. We could even see it go down to where it was last year at the lows, below $30 a barrel. Maybe that wouldn't happen until next year. But the good thing about that sort of situation is that would give us a chance to buy energy stocks at cheap prices, paying big dividends. And that's how real long-term investing positions are made. They're not made, like turning on the TV this past Monday, seeing the market gap up and just try to chase it. It's by being patient, waiting for opportunities to line up. And that's something we've got to be on top of. And just like the gold situation, we're consolidating up and down between 1,300 and 1,200. So if we dip towards 1,200, maybe by mid-June or something, that's an opportunity. And oil is an opportunity probably next year. It takes a long time for oil prices, to have they don't fall overnight. It'd be a slow decline that would take place.
Mike, thank you so much for taking time out of your vacation to speak with us.
Oh, thank you. It's great to talk to you as always.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show or for our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.